I've got a great opportunity to host a panel of, as I'm going to say, esteemed businessmen, and we're going to talk about access to capital. Rather than me go through their biographies, I'm going to have each of them speak to their own biographies. We're going to start with Dale Tremblay, CEO of Western Energy Services. Dale, give us a little history.
Okay. I always get picked on about how old I am when I start this. I started actually on the E&P side with a company called Hudson Bay Oil and Gas, which probably most of you never heard of. Moved to another oil company called Ocelot Industries. And at that company, we consolidated up a whole bunch of service companies. And I moved into that side of the business and fell in love with the service business. Turned into the 1980s where this city collapsed, and I found myself doing receiverships. And one of the companies I fortunately got a chance to do a receivership for was Spartan Drilling, and then sold it to Precision Drilling, and then spent 18 years of my life growing the company. We were about 500 employees when I started, and when I left, we were between 16 and 18,000, and about 6 billion market cap. We split the company, then I moved on to a company called Saxon, grew it from 200 million to 700 million, sold it, stayed on as chairman for about a year, and mostly I slept in my office and chose I should do something different, and so we started Saxon. It was a recap on the TSX, or venture I mean. $7 million, friends and family put together, and we bought this company and turned it into, we're the 6th largest driller in Canada now. We're worth about 500 million market cap, and we run about 1,000 employees right now, and it's been a really fun time the last 3 years. So that's about my history.
Rusty Petree with Drilformance is the CEO, and give us a little.
Sure. Let's see. I guess I've been in the oil patch about 25 years now, and I've been fortunate to have a career on a number of different avenues, from publicly traded companies. Started my career as a Schlumberger employee, Schlumberger alma mater. Also, Dale and I worked together at Precision Drilling for a while, so another publicly traded company. I've started and founded a number of oilfield services companies, either started them from scratch or acquired a company and grew it and then sold it. Also was a principal at a private equity group for a number of years, focused on oilfield services technologies. We had about 26 different portfolio companies. Is about a $1 billion private equity fund. So I've been fortunate to wear a lot of different hats and see a lot of different mistakes. That helps you a lot to not make them yourself. And we started Drilformance, I guess, in very, very late 2008, 2009, when the oilfield business in Canada was certainly at a low. So I guess a good time to start, because you can only go up from there. But yeah, it's been a lot of fun. We're about, I guess, about 100 employees now, 25 million in revenue, and expanding across North America and just now entering the Middle East.
And what specifically does Drilformance do?
Drilformance is a downhole drilling technology company. Our premier product line is PDC drill bits, but we're also commercializing some other very innovative technology. One of them is kind of a game-changing way to drill directional wells, as opposed to be able to get rotary steerable type performance without that expensive technology, as well as other downhole jewelries like tools that allow you to drill vertically or horizontally a lot further out, ways to agitate the pipe and this sort of thing.
Thanks a lot, Rusty. And over to you, Brent Moore. He's the CEO of Telematics.
So I'm from Grand Prairie originally, and grew up on the family farm, and then we eventually turned that into a large-scale bison ranch. We had about 800 head of buffalo, and I wasn't sure if I liked working with my dad all that much, so I started a bar in Grand Prairie called Mad Hatters. Easily the funnest thing you could ever do in your life, but you can't do it forever. So after 3 years, I sold that, and we started a small oil field rental business, just renting rig mats, and we were very successful. I knew a lot of consultants because they drank in my bar, and I said, you should rent the rig mats for me, and they said, that sounds good. So we rented out about $500,000 worth of inventory, and as soon as we did that, we were sitting around celebrating, and we said, well, where is it all at? And nobody had a good question or a good answer for that. So we realized the opportunity for asset tracking and the importance for companies to have visibility into the field operations with equipment, vehicles, and people. And long story short, we started initially we started a website that was dedicated to helping trucks and shippers meet online, almost like a dating service, but based on freight. So that was called canhaul.com, and we were going to work with companies that were doing asset tracking as an add-on application. And the business evolved very quickly, and we just saw the larger opportunity to enter straight into asset tracking. So we started working on our product, which is called Trackopolis, in 2009. Very little money, terrible recession, but we were able to raise money from friends and family and lots of other interested people, and now we've got 200 customers, and we're tracking about 7,000 assets worldwide in 13 countries, and the party keeps going. So it's been a wild ride. Pretty much same as Dale.
Excellent. Give or take a decade.
Absolutely.
Yeah. So we've got some interesting businessmen up here. We've got strong energy service with Dale. We've got an energy service technology story with Rusty, and a technology story with Brent. So the key element here is the access to capital. Dale, what was the hardest job you had raising capital for your current project, Western Energy Services?
The first one. The interesting part, we after we started the company or took it over, we went out and acquired 2 companies, or did a deal to acquire 2 companies. We had no money. Then we went to the capital markets. We traveled 52 one-on-one meetings. I think I went back and forth across the US border and Canada about 10 times in 2 weeks, and they thought I was running drugs, because the last time they checked me out pretty thoroughly. Then you go through all these, and at the end of it, it gets down to D-Day, and where you're at is decision time. And we were told that we could raise the $75 million we needed, but it was at 20 cents. And when we took the company over, it was 8 cents, so it looked pretty good. But we were expecting, probably closer to 50 cents. When we took over, our shares went from 8 cents to 90 cents, and I spent about 2 weeks convincing the stock market that our shares were not worth 90 cents, and in fact, they weren't even worth 25 cents, and we had to get the share price down below 25 cents. We sent out 2 press releases, and the last one basically was, you guys are fools if you don't drop the share price. Dropped to 24.5 cents, and we got the deal closed and raised the money, 75 million, and then grew from there. But it was pretty difficult in the early days.
It seems like an unusual story to anti-promote your stock in order to drive the price lower. But you're a public company vehicle. Rusty, you're private. Brent, you're private. Rusty, how did you get the financing cash flow to do what you're doing today at Drilformance?
This was not a real complex story. For Drilformance, I just opened my checkbook, so we're fortunate enough not to have outside funding involved in Drilformance, which allows us to be quite flexible and dynamic and not really have to answer to any other parties. And that was kind of the genesis of how it got started. I ended up probably putting a lot more money in it than I wanted to in the early days, but it's now it's very cash flow positive and self-funding, so it enables us not to require the distraction of having to go out and continually raise capital, which can certainly be a distraction. And we're fortunate enough to kind of have some of the private equity relationships that I have that are kind of there if we ever wanted to make an acquisition or expand beyond what our cash flow can do for us today.
So you're still maintaining relationships with others in terms of to future access to capital?
I do. I get a lot of inquiries just out of the blue, and then, I've got fairly deep relationships with, Calgary's a great place for private equity. There's a lot of capital here. There's a lot of good groups like, 32 Degrees or SCF Partners, or, a number of traditional oilfield service private equity groups to go to when you've got, a great gross margin business and a good idea and good technology. There's always access to capital.
Brent, you got a slightly different story?
A little bit different, not that much. We've raised $5 million so far year to date over the last, I guess, 3 or 4 years. The first money came from me from selling the bar and then selling the rig mat business, and my partner at the beginning, Duncan Ford, our CTO. It wasn't long till I basically forced him to mortgage his house, and then I went to my parents and sort of forced them to mortgage some of their land, and continued to talk to people and take news stories and just get enough money, $5,000, keep going every month. Every time we had a good news story, we'd go back to the community and raise as much money as we needed. We definitely lived all together in a condo quite a while. That was the office, and we were doing it the old-fashioned way, but it continued to produce results, and we continued to demonstrate that the technology that we were creating was going to be valuable in the marketplace. And I think we have 85 shareholders right now. We've probably done, I would say, 250 different tranches for checks that we've gotten from people at various different times for various different reasons. And for those 85 shareholders, I probably have 350 people that I've met with at their houses and at auctions or different locations that told me that I'm out of my mind and they're not going to give me any money. So really, we've just persevered and continued to leverage the business as it evolved.
With 85 shareholders, what has changed for you in terms of reporting? Is it still just drawing pictures on a napkin, or are you a little more?
Yeah, as soon as we broke 50, then you have to do audited financials. So we're sort of public in that regard, but without all of the costs and stress of being public, of course. So we definitely have to deal with that, and then you have to have shareholder meetings and the rest of that. Probably the biggest thing that's changed is as that group expands, you sort of become, and it's mostly up in Alberta, primarily in Grand Prairie area. So you become a bit of the talk of the town with news stories. You're out at family events, and so said this, and so said that. So you definitely start to manage the politics of what you're doing, and it's pretty fun.
Are people willing to give you from that same community, the same friends and family that you've gone to the well already? Are they interested in giving you more money as you need it?
Yeah, I would say almost all of them have given us more money as we progressed. I've had lots of different warrant arrangements with different people and had them exercise those on very short terms. So we've done that. We've gotten debt with them. We've done all kinds of different financing arrangements, and it's really just what do people have, what's your story, and what kind of deal can you make, and then can the lawyers get it to work. And it's fairly complicated, but you do what you have to do. So that's been our story for several years now.
And what kind of dollars are we talking about? In an annual year, you're needing cash flow or capital of how much money, say?
Operating costs right now are around $250,000 a month. So, but it's been growing. We quadrupled operations 2 years ago. So we've grown revenues over 300% in the last 2 years consecutively. So, and we're on pace to probably double. If we get a larger client, we'll do triple. So we factor receivables, we bring capital in, we do different debt deals, and we basically leverage everything we can, except for the corporate assets, because of course they're intangible assets, so no one will touch that with a 10-foot pole. So,
excellent. That's more on the private side. Going back to the public company side, Dale, through Western Energy Services, you had those big deals. What's the public company market like for raising money today?
Today is probably not that great. For equity, I think the debt side is actually very strong right now if you wanted to add debt to your books. But equity, pretty much non-existent. I think the market's about to change. There seems to be life in the oil field service market right now, so we're seeing our multiples improve. which then will lead to being able to go to the markets and raise some equity. And we run a mix of both debt and equity in the public markets. So.
And the public debt, does it come at a premium? And are you involving any conventional lenders on the capital you're trying to raise?
Yeah, the people who actually own our shares probably own most of our debt. So
okay.
So it's high yield, and it's a Canadian market. We raised 175 million. We needed 125 million. We went to the market at 7 7/8. It was oversubscribed 2-to-1, so we took 175. Rule 1: when they give you money, take it.
In terms of your business, Dale, very capital intensive. You're often looking for more than, say, Brent or Rusty would be looking for at times. So do you find it tougher? You've been on the private company side before. You've always been capital intensive. Do you find it difficult getting the larger blocks of money?
You know, I think at different times in the cycle, it changes. So, with the public markets, which is, the side of my life I love the best, I'd rather go to a group of people and tell my story and get a whole bunch of money from a whole bunch of different investors, so I can run the company the way I feel is the correct way to run it. So I prefer going to the markets, and the reality is they open and close. And so the key to being, a public company is the only thing you have to know is own your balance sheet. Do not let anyone convince you you can have more debt or less debt. You know how much your business can afford, and you better stay in control of it, because you lose control of it, it's like the public markets just go, you're an idiot, and they don't want to ever see you again or have you show up. So as long as you control your balance sheet and know exactly, what you're spending your money on and why, and you're always in control, and everything you tell them, comes in line, you don't have a lot of difficulties. You have to learn all the markets, like the easiest place in Canada to get money is Toronto. Hardest place to get money is Montreal, maybe Winnipeg. But Montreal, you'll go to Montreal probably 5 times and pitch them before they'll give you any money. So just different markets you have to learn them and treat them with respect as to how they run their business in each of those markets. So it's a big understanding of how to get money from people, and mostly as long as you do what you say, it gets easier. So
keeping the reputation is as critical as anything.
It is extremely critical. And meeting your numbers, the thing about the public markets, you're producing quarterlies, and the analysts, they're so sophisticated. When I first started, we were the first public drilling company in Canada. So it was relatively easy because there was no analysts really, and nobody understood it. So you could pretty much say what you wanted and they'd have to believe you. Whereas now, there's probably, we have 10 analysts follow us. So in Canada, there's probably 20 analysts, and they do models. And these young kids are, way smarter than me on a computer, and they can get it down to pennies. And so they're pretty sophisticated, and your number's better. Well, the magic word is consensus, and you better meet consensus or it will not be a pretty day. So.
Thanks, Dale. Rusty, you had, prior to Drilformance, you had experience on being on the other side. You were with a entity called Kenda Capital. How has that experience helped you with what you're doing today?
Probably one of the main things, other than deal origination, was that I spent a lot of time in the operating of our existing portfolio companies. And when you see that many different technology startups in various stages of evolution, you see pretty much almost every mistake that can be made. And when you're involved in kind of correcting or working through those mistakes or getting the business on the right track, it's just a great experience to be able to learn that rapidly from seeing a lot of different companies. When you're doing it right, as well as when you're making a few fundamental mistakes. So,
what are some of those mistakes that guys were making?
Spreading yourself too thin, trying to be an inch deep and a mile wide is a huge mistake that happens to a lot of startup companies. They want to try to be everything to everybody, and you've got to focus to be successful. You got to roll your sleeves up and really have intense focus on what's going to make a difference in your business. The people is a fundamental equation. The people involved, whether you've got a technology expert or a business expert, but the dynamics of making that work effectively. There's trying to think of a few more that I've seen, but the one thing that I always try to do in my business is I look at the two ends. I always look at risk mitigation and value creation, and try to kind of keep the middle operations to the day-to-day, let others kind of manage the day-to-day operations, but really think about what are those one or two or three things that's going to make a step change in value in your business, and focus on those. Because you can spend your day doing a ton of things all day long, but at the end of the day, if you got to look back and say, did I really do anything that created value, or was I just kind of dealing with a muddle in the middle? So that's kind of one thing that I've definitely learned over the years.
Excellent. Brent, a little more on the private company side in terms of looking for funding and stuff like that. What's been the best story in terms of fundraising?
The best story in terms of
Can you get
fundraising?
More money than you need?
Anytime you get money is the best story. It's the exact same experience. It's awesome, and it always comes with you've turned over a lot of rocks, kissed a lot of frogs, whatever it is. But I think probably the best, some of the deals we've done, definitely some larger deals. We've got $300,000-400,000 at a time. We did one for $800,000. So you start to go, okay, we can relax for a few months, and we can start focusing on that. We can accelerate the technology roadmap. We were able to grow the business big enough so that deal right now we're selling our technology through Bell Mobility in Western Canada. So had we not been able to grow rapidly, those type of opportunities wouldn't have been there for us. So we always had a philosophy of, if we build it, they will come, and who they are is the big channel distributions, the larger customers, and that's who you're really going to grow this recurring revenue business very quickly. So whenever you got large money in there, I think from my perspective, I was like, well, now we've got so much money into this, no one's going to turn back now, so we're totally going to make it. We just got to keep going. So again, I think the other thing is giving news to the shareholders when you've sat across from them and talked, to many different families, and they've decided that they're going to do this, and they've thought about it, and you're doing that. It's always a win. It's probably one of the best sales that you can ever have is when people are saying, I think giving you money and your team that you've built, if I believe your story and you've proven the math and you've done all of your homework, so here it is, go spend it, and let's make some money. So I don't know. I like it when we sell, when we raise lots of capital, and when we don't, it's not as much fun.
So when Dale's talking about it's absolutely critical with the reputation in the public markets, Dale, you can't be wrong too low off your numbers. Brent, you're putting information back to your shareholders. Do you have any sort of latitude? When you're given information, does it have to be glossy, audited, quarterly information, or are you that refined?
I usually send emails, and I try to follow. Because we have lots of shareholders, we're under the influence of the Securities Commission, so we got to be careful with promoting too much positive news. We try to steer clear of numbers and projections. So we're certainly, under a structure when we deliver that news, but we definitely try to communicate with them as often as we can. As the business has grown, being 3 years ago, it was every couple of weeks, hey, someone phoned, our phone rang, and they were interested in the product. Can you believe that? Now the phone rings all the time. So you sort of evolve with what information you're willing or able to send out. And you also look at, when you do give some information, that there's definitely a reaction with people, and you need to be able to prepare to handle that, especially when you're dealing with a local community. We're not nationwide, we're not public in that regard, but certainly for that group of shareholders, there's going to be conversation that happens back and forth. So you want to be mindful of what you say. Don't give them too much, but you got to give them enough so that they don't phone you and say, we need my money back right now.
So Rusty and Brent, you're both on the technology side. One of the things that we look at, and from an accounting perspective, is looking to the government for whether it be research, exploration, development credits, anything else. For the three of you, maybe Brent first, government, federal, provincial, how have they helped you access to cash?
So number one, well, the only thing that I can think of for sure is the shred credit. So certainly we're developing, we're innovating, we're taking risks, we're doing all of those types of things. So we've always qualified for the scientific research experimental development tax credits. It's a major undertaking to file, to document all that type of stuff. We've been successful with getting that money back into working capital 3 years in a row. At this point, we're actually dealing with a lender, so we've gone through all the due diligence, and they got GSAs in the company, and they're lending us money ahead of time, so that we don't have to wait for the shred credits to come back. Because by the time you start spending that money, it can be 18 months or less until you get that money back. So when they will allow you to accrue it and then leverage that, I mean, it costs you an arm and a leg, but at the same time, when you're a high growth company, it's cheaper than raising equity. So we're definitely very, very lucky to have that. At the same time, we still look at what can we do to reduce innovation costs, and can you keep more working capital in so that you can drive sales. So yeah, shred credits, everybody should take a look at that, but it's a fairly serious undertaking. It's not just asking for some money and you get it. It takes a lot of work.
Rusty, are you following the similar, you being having a technology element?
Yeah, we looked at the SRED credits, but the way Drilformance is structured from a legal and a tax regime, it didn't really make sense for us to go down that path. But yeah, for local companies that don't have, the way we are structured between our U.S. entity and our Canadian entity, wouldn't have helped us on either end from a tax perspective, unfortunately.
And what about the federal, provincial government? Any other assistance helping you access capital?
Yeah, we haven't looked at that either, but that's probably something that's worthwhile to do.
Yeah, but do you have a capital need right now on Drilform? No. Okay. You're still self-funded, still working through cash flow. Brent?
I might say that, a lot of the programs we looked at, there was a lot of them out there, and we also worked with Tech Edmonton in Alberta, which was very good. They got us started in the early days. We wrote a professional business plan that helped us get some. So there was definitely lots of programs out there, but most of them they were $50,000 or a $25,000 bursary, and we were spending way more than that money or that much money. So I always was like, well, should I spend a month applying for this grant and seeing if I win, or should I just go up and talk to some people with money that are risk takers and tell them that they should buy into my idea? And so that usually ended up time being of the essence and the growth being too big. We never really found a lot of programs that we were like, this is going to, if we get that money, then we're good. We were always operating out of we got to have it now because we've got sales, we've got growth, all those types of things. So I think the pressure was too great and the resources were too short, so we just did it the old-fashioned way, I guess.
Excellent. It's just funny, all of you have talked about the markets, whether it be the private equity market and the public market. Anybody have any comments on the banks and how they've helped you access capital? I have to say that because ATB is a sponsor. Dale, some thoughts on the banking?
They're a banker of ours. We run a syndicate with the Royal is our lead, and HSBC and ATB. And yeah, they're an important part of our debt financing. So we run a revolving loan for day-to-day business, and then we have an acquisition loan that we can access anytime. And if we did it, we'd usually use it for a while and then go to the public markets and pay it off, so that we'd always have it available so we could execute on a deal, you know, quickly. It's easier, you know, the way the syndicate works, we phone up the bank, tell them what we're doing, send them over a couple of reports, and basically we're spending money the next day. So yeah, you know, you have to have it to execute.
And what about the market? You talked about the equity market for an equity raise was not especially great today. What about going to the banks looking for financing? And that's a question for all three of you.
Yeah, banks are great. They're, I don't think, we're talking to our bank about increasing our lines. There doesn't seem to be any negative feedback that holding back on your line or decreasing your lines, you know, like we've seen in the past. The markets, I'd say, for the oil field service business that I'm in, is pretty strong.
Rusty, I know you're living off of cash flow. Things are great. You're living the dream.
Yeah, I definitely agree with Dale. We do the same thing in terms of we have in place a working line of credit, and we've got an asset loan where it's, you know, both are kind of paid down to zero, but we've got access to about $5 million of capital, you know, at a moment's notice if we need it to go and, you know, if we need to do a deal or we need to aggressively move into a new technology. So it's always nice to have that in your back pocket when you need it before you need it, because if you wait till you need it, then it can be somewhat difficult. I have found that the appetite for banks right now is a very good market. So, and particularly historically, and last time I was looking at buying a business in Canada, I found that the banks in Canada were quite a bit more conservative than the banks in the U.S. in terms of senior lending type loans as well as mezzanine loans. But that kind of flips back and forth depending on what's going on. But you know, so you can always, it's kind of funny because running a business both in the U.S. and Canada, there's always little nuances when you look in the details. For example, our general liability insurance and all of those types of insurances are cheaper when I go to the markets in the Canadian market and cover both the U.S. and Canada than I would be going to the exact same underwriters in the U.S., which is kind of odd. And you can find that same type of discrepancy in the bank sometimes as well.
Excellent. Last thought on that.
Our experience with dealing with the banks is that they won't return your phone calls, and but the good news is that we're close. We got to be cash flow positive. We know those things. We're looking at the balance sheet. We're trying to make things happen. We're starting to speak to the banks right now. We're certainly looking forward to creating some relationships with them. We only have 3 years of financials, so when they say show me your last 3 cash flow positive, well, that's when the conversation sort of ends for us. But we're certainly, you know, we're factoring receivables. We're paying 24% interest. If anyone wants to get in on that on 18%, you can meet me outside over there. We'll do a deal. I'd love to save 6%. About 800,000 of receivables right now. So we understand where we're at. Those are the pains of growing fast and maybe growing a little too quickly, as we've talked about today. But that's what we need. That's what we have to do. So we'll take our licks for now, but we're looking forward to getting into the bank soon.
Brent wants your capital.
Cue my presentation.
I'd like to take this opportunity. We've got 3 businessmen with differing experiences on access to capital. Love to hear some questions from the floor. Anybody ever have trouble accessing capital in the room? Hands up. Just the one?
Should have been here in the 80s.
With that being said, fire away.
What made you decide as a small company to go to the high yield route in Canada as opposed to just asking the banks for increased line or equity?
For myself? Yeah.
Just to recap that question, you said you wondered why you went the high yield route as a smaller entity. Yeah.
So you're basically, if you go high yield, and our high yield is 7 years, and there's no covenants. So as long as we pay the interest, we keep the money. We don't make any principal repayments, and there is no covenants. You basically, you know, it's free money until the 7 years up, and then you have to pay it all back in a lump sum. And in our case, we plan on being significantly better, and just keep rolling that high yield bond over and over, or upsizing it. You know, in Canada, it's still kind of early markets. You can do smaller amounts like you know, our 125 or 175. If you go to the U.S., and that's where, you know, eventually we'd like to grow into that, you have to be somewhere $400 to $500 million high yield bonds. So it's just a nice piece of paper. If you plan on having debt on your books for a long period of time, it matches our equipment. We have long-term assets in it, and it just matches a lot better than having to worry about the covenants of a bank and having to pay back monthly principal payments.
What's your number one advice for entrepreneurs with your experience?
For you know, I think what's made me successful is you pick your partners, and you want to work with people who have relatively the same work ethic as you. And if you're going to start a new business, the one thing you're going to do is work a lot. And, you know, we work in our company, startup, we probably work 14-hour days, you know, on a regular basis. We work Saturdays. So you have to have a group of people who are going to have a strong work ethic. I think I believe in partners. I don't believe that I know everything, and I need people who know other things better than me. The accountant who works for me, who's one of my partners, probably one of the best accountants in the industry, and when he's putting prospectuses together, I absolutely trust him. And Alex, who is our president, he knows the field operations second to none. So we think we basically are an unbeatable team because we got the finance covered, the operations, and the equity market. So I think, you know, you need that strength in your organization if you plan on growing and to any size or greater size. And you know, when we started, we wanted to get to 300 million market cap, and then our next goal was 500 million, and the goal we're working towards right now is $1 billion market cap. So to get there, you have to pick the right people to you know, go down with the trail with, and you have to make hard decisions, and the hardest decisions are letting people go who, you know, got you as far as you are at that day, you know, on the day you let them go. But you have to recognize that some people won't get you to the $1 billion, and then you have to start picking different people. If you're going to be a $2 billion company, you can't be picking from a company that's only 50 million in market cap. So making those hard decisions, you know, those are the ones that hurt the most, but you have to make them if you're planning on to have a successful business, because I don't think there's too many business. Years ago I did receiverships, and a guy, I worked for this accounting firm, and he said to me one day, he said, "Dale, how do you know all these businesses?" I said, "Well, really, I don't, but they're all, you know, I just look at them as always being the same. No matter what business you're in, you're going to have revenue and expenses and people. And the most important part of your business, or any business, I don't care, ours is a service business, so it's really important, but people side of your business is absolutely the most critical thing you can think about every night, and make those hard decisions if you're going to be successful.
Thanks, Dale. We've got time for one last question before we close. Anything else? You guys are going to be around later and answer a few questions. I'd like to pose one last question, and I think the gentleman asked a good one. Access to capital. Rusty, what's your tips for the private entities out there?
Credibility. If you put numbers out or you're showing someone projections, make sure that they're spot on, you believe in them, and you can support them. Anytime you can create a little bit of competitive tension, you're always a lot better off. That's kind of a double-edged sword. You want to make sure you're getting money from someone that's going to add more to your business than just money, but you need to kind of play the field a little bit to make sure that there's some private equity sponsors that will come in the 12th hour and say, oh, how about X number of warrants in this deal or something. But if you have that competitive tension there, then you can always kind of get through those little sticky points without too much damage.
Excellent, thanks. Brent, some thoughts. You're going to the market a lot.
Yeah, I would say
any
probably
tips?
The number one thing that if I was warning other people or to be aware of would be make sure the people you're talking to actually have the money, and be careful with finder's fees, and don't let people make you do a ton of financial models and a ton of things when they're really just kicking tires, because when you're a young company, you need all hands on deck, so you can't afford to drag people around and do too much of that stuff. So we used to, when people would talk to us and say, hey, we're interested in raising, putting some money into the company, the first question now is, are you writing the check, or are you representing some other people that we've never met, and I'm going to have to go and do all the dog and pony shows, and they're not going to understand my business, and I'm going to waste 2 months of my time. So for us, even wasting a day, you can't do that. So that would be my big tip would be careful and watch finder's fees, and don't do exclusive things, and always try to get a plan B. If these guys are ready to invest, go get somebody else that's ready to invest. So you're in a competitive bid. Otherwise, the 11th hour, they're going to tighten the screws on you, and then you're going to not have an option.
So be careful. Make sure if they have the money that it doesn't come at too great a cost.
Invite a lot of people to the auction. That's what you got to do. If you only have one person in the auction, it's not going to be a very good auction.
Dale, anything to add? You're on the public company side, experience on the private company side. Anything to add?
Do what you say. I think credibility. Rusty and I grew up at Precision, and we were developing technology side of the business, and every quarter for about 2 years we didn't achieve anything, nothing delivered on time, and revenue or earnings never matched what we promised. And we fortunately had a great side of the business that carried us through, but we used to go on these public conference calls, and everybody was polite and asked questions, and you'd give your answer. Then I'd go back to my office and get screamed at for usually 2 days straight, asking how stupid we really were and thinking we could be successful in this technology game. And Rusty was involved with buying a couple of great companies, and finally the pieces came together, and we ended up building actually a great business that we sold to Weatherford. So being credible is number one, and being patient with your shareholders. Anybody who gives you money deserves your time to explain, what's right or wrong about your business. So, you better be willing to give your time once you've taken someone's money.
Thanks, Dale. I think that is all for our panels. I think to wrap up, some of the learning points is certainly, I heard reputation, credibility, and I think that goes along with that is also good operations, make money, solid balance sheet, but you got to be efficient and be careful as well. I'd like to thank the panelists. They gave their time for this afternoon. That's great. Dale, Brent, Rusty, thanks so much.